myself. Let it. I'll just...
Kielty, plumbing, heating, cooling, celebrating 15 years of bringing comfort to you. Healing Realty, call RJ Kielty, they'll get your system working to cool you down. And if fixing a leak is what you seek, RJ Kielty's service is the best around. RJ Kielty, plumbing, heating, cooling, over 50 years of bringing comfort to you.
All right. Welcome to episode 37 or no,
47.
I'm 10 off. Time's flying. Well, we have a very experienced podcaster here, Lindsay Weber.
I've done a couple.
Yeah, done a couple. She actually did my first podcast. I was actually, on your guys' Yours and Kayla's podcast. That was pretty cool.
Yeah.
Remember
That's
feeling
been a minute, but it was fun.
Yeah, that was a lot of fun.
I learned
a lot of good. Yeah,
I
exactly.
learned a lot.
A lot about. I mean, that was at we did Four and Co. Yeah, that was actually probably one of my favorite podcasts. I'm not just saying that.
Well,
but
that's nice.
Because we had the guys on there too. So
and everybody had their part of what they did, and like I said, I learned a lot about the company. Mm-hmm. Some things I had no idea. I was like, that's so cool.
So Lindsay, Keystone Mortgage Solutions, clear to close processing, and founder of the Connector. And what I know Lindsay over all of those things is her stepping up for the community. Anytime that there's an event, you're like behind it and helping organize. People don't realize how tough these things are. You guys just did the bingo purse
bingo.
Yeah.
Designer purse bingo. It was great. We had so much fun.
That was for a first event.
Mm-hmm.
I don't know if there's anything I personally in Pasco County know of that was more impactful.
Yeah.
That is awesome that you guys were able.
It definitely filled the
that.
cup for sure.
Yeah.
It was a lot of fun. And
how much did you guys
we were able to give the Hope Shot $45,000. So after all of our expenses and for
that's goals right there.
Yeah. It was exciting. We had a really great time, and we're looking forward to next year. We have a date. We haven't released it yet, but it'll be here local again. So
that's awesome.
Yeah.
You guys just absolutely killed it.
Some changes, but we had a couple hiccups. We tried to keep them under wraps a little bit, but
I wasn't able to go, but my wife was there, and she loved it.
Yeah.
She said it was like, she was like surprised that it, everything went off so well. So you guys got some pretty good team behind you.
We did have a good team. That's exactly what I was going to say. Amanda and Kayla and I, we spent lots of Zoom calls, and our husbands are looking at us like, what are you doing again?
What do you think if a bunch of guys were to try to put on an event like that? How bad would that have been?
I don't know. I don't know how that would work out. We need to be organized.
Yeah, we are not.
The purse models, that was great.
That's fun. Right. Drake, he was. Yeah, I saw a little bit of his sound bits, and he was funny.
Yeah. And we had David Geiger. He was like our right hand for everything IT. It was great.
God, you got to have that. A lot of people don't know that. Like, there's so much on the back. It's like starting your own company, and you has to run perfect from the start. A big event like that. And having the right people in your corners. That's it's a testament. You've done it long enough, I guess.
Yeah. It was great. I can't wait for next year. So. Be here before we know it. We'll start planning soon.
Yeah.
So we need lots of sponsors, and we need help.
Yeah. It's tough for you guys to keep doing that. Like we've done events for 15 years and stuff like that. And it's just we put a lot of stress on our team to kind of organize it all.
It's usually the same ones.
Yeah.
So we're always looking for help and volunteers and
yeah. Do you guys get volunteers, or can you guys I guess get help there would be in something like that, but like high schoolers and stuff that? Okay.
Lots of moving things and
that's true.
Helping set up the tables and the bringing things in, carrying things, computer stuff.
Yeah.
But yeah,
that's
a
awesome.
true 501c3, so they'll be able to get like hours for school and things like that.
That's awesome.
But yeah, we're always looking for help.
Let's change
Please.
your gear a little bit too.
Anybody want
Yeah,
help?
please. We'll always help as much as we can.
Okay.
What you guys do is awesome. And you guys, every year you're going to switch, right? You're going to switch.
So that is our plan, is to have a different beneficiary.
Yeah.
Somebody local in the community.
Yeah.
We want to kind of keep it in our own backyard, so to
Yeah.
speak. And not really, I don't want to say like the big companies. We just want to keep it here, small, local.
Yeah.
That's our
I
plan.
love
That's our
that.
intent.
Because
Yeah.
when we originally, and I would still feel like they're good causes, but
They are.
you know, but a lot of when we were first doing events and I first started, I'm like, oh, I want to do these national, you know, Susan G. Coleman and
Yeah.
this or that, this better, you know, I'm like, they really sat down and thought about it. I'm like, I love that it's impacting people nationwide and that's important. But like to me, community and impacting people directly in our community, you know, makes me feel better, I
We
guess, at
watched
least.
Justin. Yeah, we watched Justin from day one, and the things that he's done for our community and being right here was incredible. And it was almost an easy choice to, choose him. We had some hurdles at first, but
Mhm.
we fixed them and figured out how we were going to be able to do it. And I was really happy with our choice over that one.
Yeah, yeah, Justin, we had him on the podcast, and just what a great guy. Hey,
Yeah.
he's just an amazing drywall guy.
Yeah.
He doesn't tell anybody that anymore, but
No.
he's incredible at that, like perfectionist. You know
Venetian
what I mean?
plaster. It's
Yeah,
an art for sure.
yeah. I have no clue. I see those pictures. I'm like, I don't know how you do
It's
that, man.
beautiful.
That's I couldn't do it.
You can come into my house. I've always told him, you're going to come into my office and you're going to do the wall behind my desk.
That
He's
would
like,
be
no, I'm
cool.
not.
But he focused on to something he's really, really passionate about, and I mean, for a younger charity, I mean, he's killed it. He's done
Yeah.
an exceptional job.
All the
So,
houses and the homes that he has
yeah.
here locally, and the
Yeah,
things
Lynn.
he
I know
does.
Lynn at Pro Source. We've done some of the houses. Lynn at Pro Source. She helps a lot with that kind of stuff, and she's another
Yeah.
amazing lady in the community.
She
And
is.
yeah, so we're lucky.
We
I say
are.
this
There's
almost
a lot
every
of-
single
there's a
podcast,
lot of
but
good
we're
people
so
that we're
lucky that
surrounded
in
by.
Pasco County. You
Yeah.
know, I don't feel like you have those personal connections in some like the say larger counties, but Pasco's getting pretty big.
It's pretty big.
But
It's a small, big town. It's kind of odd. Like everybody knows everybody type of feel. And I'm not originally from here. I'm originally from Maryland.
Mhm,
So I have different relationships with different people from different paths of life.
mhm.
And, we all kind of connect in some sort of way, even though they're different parts. It's pretty
Mhm.
cool.
That's awesome.
Yeah.
So let's talk mortgage.
It's mortgage.
What got you in the mortgage?
Oh, goodness. Truth be told, it was, I'm going to age myself, Tanner, 1997. I was
You were
still
just
in,
born,
I
right?
was just born. I was in high school, but I got a job answering the phones in a mortgage company. And my desk was behind kind of like a whiteboard like that, where they put all of their transactions and all of their fees. And I'm getting ready to go to college, and I was going to be an occupational therapist. That's what
Mhm.
had my heart set on. That's what I was going to do. I was going to help and be in the medical field. And I'm looking at this board. I'm like, is that the money that they make? And believe me, I'm 17 years old. So
Yeah.
like I'm seeing dollar signs, not what, a logical.
Yeah.
I'm not thinking logically of what.
No, I know exactly what you mean.
What I'm supposed to be doing. I'm like, I can do a lot with that.
Yeah.
17. So anyway, actually a processor kind of took me under her wing and taught me how to process mortgage loans. Well, funny enough, at that time, you didn't have to be licensed. So you just needed to know the job. And then,
Really?
yeah. And then we had the big refi booms. We were doing all
Mhm.
kinds of streamlines, and I learned anything that I could possibly have learned from that job going into the mortgage industry. So from there, I had a couple different jobs in different positions. I've touched in quite a few. I've been processing. I've been an originator, obviously, a broker. I've dabbled in underwriting. That is not my favorite thing for sure. That's
Yeah.
a tough job. But pretty much every aspect of the mortgage industry I have been in some sort of aspect throughout my entire career. Um, when we moved to Florida, I was working for a company as a processing manager, and back then they had something that was called net branches. So basically, it was an umbrella, and you had these different offices that all worked under that same umbrella, and they were deciding that they were going to split off and create their own. So I created, funny enough, we were talking about clear to close processing back then, and brought it to Florida.
Really?
Yeah, I was a processor for strictly for for like a contract processor for many years. And it was great. I could stay at home. I worked from home. I still worked from the people that I worked with in Maryland. I was able to be a quote unquote stay at home mom and come
Mhm.
and go as I pleased, which was really important. And then I originated kind of, we'll call it on the side. People asked me to do loans, and I did. And then I started Keystone Mortgage. What year? I guess right around COVID. Um, and decided that that's the avenue I was going to take, and have people.
And who would have thought too, even around COVID, you think that the world would end, but you're like, oh, let's go.
I buckled down.
A lot
there.
of good businesses started around then too. Yeah.
Yep. I was ready to go. Yep. So buckled down. The interest rates were great, and sat in I can work from home,
Mhm.
and I did. That's kind of where
That's
the
awesome.
company itself started.
So
there's a lot of in between there that I
yeah.
skipped over too, but that's the gist of it.
So you really started, I guess, like you say, you're working for different companies, but what made you say like, hey, I want to start my own business?
So funny enough, I was approached by a company that wanted to kind of have their hands in everything. They wanted to
Mhm.
build homes and have their own um, mortgage company in house, and they asked me if I would open and run it, and I agreed. Um, so basically, I had to have somebody start taking over the processing company,
Mhm.
and I morphed over into the mortgage side of it because I can't hang my license under both.
Yeah. Oh,
Um,
I didn't know that.
Yep.
Yeah.
So I'm the broker owner of Keystone, which I can originate, and that's where my license is. And then I own clear to close processing. And if the company processes for other mortgage companies, they have to have another license. I can't do
Mhm.
both. Um, so somebody took that over. I still own it, but we operate under their particular license when we're processing for other brokerages. And it was probably 2 years, and they kind of went under and didn't proceed anymore, and now I'm like, "Okay, what am I gonna do? Oh, no." I said, "Well, I
So the
did
whole
it."
builder went under, right? And then they
Everything.
closed down. Yeah.
Yeah,
Oof.
we weren't it was, like, December, and
Hopefully we weren't doing their plumbing and AC.
it was, like, December. The mortgage business is not busy in December.
Yeah.
Everybody's like,
They're not worried about that. Yeah.
no, they're holidays and Christmas and the New Year, and it's really slow around that time
Mhm.
of year. It just naturally is. And I'm like, we haven't like really given it a real chance yet. Like
Mhm.
it'll be okay. And I guess they couldn't continue. So they went on their way, and I was left with no mortgage company and somebody else running my processing company. Okay. So I said, all right, well, I did it before. I'm going to do it on my own.
Mhm.
And I did. And I had lots of community support and people to help, keep me on the right track and push
Mhm.
me. And that's how it started. I lost everything before that. I was
Oh,
like, okay, cool. But
and you knew
makes
how
you
you
stronger.
wanted it ran, and you could
Yeah.
see what other people did and what you wanted to change. You know
Yep.
what I mean? And
Yep.
having the guts to kind of do it during COVID, that's pretty. That's a testament to
Yep.
to everything you do.
Yep.
You know, and you were talking about the community supporting you. Well, that goes to
They
show
did.
like you support the community's going to step up and help you.
Yep.
You know.
Because there were times where I'm like, all right, I'm just going to go and I'm going to get a job, and
Mhm.
but I didn't need to do that.
Yeah.
I definitely had the community support, and I'll never ever forget it.
Mhm.
So,
So how about the name? How'd you come up with the name?
so my daughter, my oldest daughter, she went away to England for I guess 2 years, and when we were there, we visited all different kinds of historic places, and there is one place, and my age is getting to me. I can't think of the darn name of it to save my life right this second. Completely went blank. Um, gosh, it'll come to me.
Where's that?
So,
England?
yeah. And all different kinds of rock forms, and we stood out there, and it was like a
Oh,
great family place to take. We took all of the kids there on
like the
a
big,
trip.
it has all the formations.
Yes.
Oh my
Why
God.
can't I
I'm
I
a
think
know
of
what
it?
it is too. Hold on.
Stonehenge.
you.
Stonehenge. I was
Good
saying hedge. I was thinking hedge
Good
something.
old
You
Jesse
know?
in the background there. Stonehenge. Good
Wizard of
grief.
Oz.
What
It
is
saves us
wrong?
again.
So anyway, we visited there, and we took everybody when we were visiting Kaylee in England, and it was such a memorable place to go, and watching my kids learn about history and being so intrigued. So Keystone is the keystone to
I like
how
that.
how everything is built up, and we brought it home with us, so to speak, and that's how we named it.
That's awesome. That's awesome.
Christian was funny. I forget how old he was. He was little, and they had these old school like Nokia phones, and you could listen to them, and it would like tell you a story. And this is kind of morbid, but it's it's really funny because he was so like into this phone and listening to all the different history of Stonehenge and all the different like kings, and he's looking at and he's like, "Oh, we're standing on dead people." He like thought it was the coolest thing. I'm like, that's really weird, bud. But yeah, I guess we are. And
What did they say? Aliens or something?
no.
Well, how did all those stones
No.
get up there? Yeah.
We watch the what is it? It's an alien show at night. Chris and Christian watch it all the time. The guy with the crazy hair. Ancient Aliens.
Yeah.
Yep. So they still watch that. But yeah, they talk about Stonehenge a lot.
There you go. See?
Yep.
Takes
It's all
on a
meant
new
to be.
meaning to your company. I have a question for you,
Yeah.
I guess. So I don't know much about mortgage because I'm not
Okay.
a homeowner yet. But for people who are first-time home buyers, what would be the first step they would need to take?
So the
think?
first thing that you would want to do is get pre-qualified. And if you're not,
the realtors
realtors
will love you.
Yes. Realtors will love you, making sure that you're able to go and buy a house and not look at the house first and then
oh wait,
go
I
get the
can't afford
loan.
it anyway.
And the great thing is that, especially with first-time home buyers, is there's a lot. You said that you don't know much about it. Well, you're not supposed to. You've never done it before.
Yeah.
So that's my job, is to teach you the ins and outs. And if you're not prepared, tell you what you need to do to be prepared
Right.
to buy that first house. It's such a cool experience. It's hard work, but buying that first home for you or your family is always very rewarding. And one of my favorite things to do is first-time home buyers. They always think that they need like 20% or all of this money, and there are pieces of the puzzle that you should have in place so you're not, behind in your mortgage payments, and you're able to afford the home that you're purchasing. But all of those are myths. You don't need a whole heck of a lot of money, and you don't need to have perfect credit. Some people can buy homes right out of school, and it's a great investment. So
For sure.
Yeah, and it's a lot of paperwork too, right?
it is. I don't mind the paperwork. I like it. It's weird. I like the numbers and the papers and the organization part. But truth be told, like, we don't have a whole lot of paper, like actual paper nowadays.
Anymore, right? Yeah,
No.
everybody was scan stuff or whatever.
Well, everything's done digitally, so we can, create a PDF and send it to them, and they e-sign it, and I never see one draft paper. Taking pictures of or scans, like, to send me your W-2s or your pay stubs or stuff like that. Very
I was
little
gonna say,
paper.
what do you kind of need usually?
So it depends on the type of loan, but we'll go across the board. We'll go like conventional or FHA.
Yeah.
So W-2s, last 2 years W-2s, pay stubs, the last 1 month worth of pay stubs, usually copy your driver's license, bank statement with all the pages.
Yeah.
So even if that last page is like non-existent or has no information on it, we still need that.
Need it.
Still need that last page.
That blank page 6 out of 6 or whatever.
And that's pretty much enough to get us started. And then we evaluate everything, I guess is the best way to say it, and pull credit. Credit is really expensive nowadays. So we have some tools that we use to keep the expense down. We
To be
pull,
able to pull the credit is
Mhm.
expensive. Okay.
So it's over,
Huh. I would never
it's
thought
almost
that.
over.
Yeah.
Well, it didn't used to be.
Yeah.
And then they realized that we had to use their credit bureaus so
Yeah.
they can charge you what you want.
Oh, I got you.
Um, they're trying to get it under control, but to pull a credit report sometimes if it's a joint husband and wife, it's almost $200 just to pull a credit
I
report.
would have never. See, I
Almost.
figured that would be like
it's a lot.
free as part of like, yeah, that's crazy.
Well, if the company pulls it, then the company's paying for it.
Yeah.
Or if you have like a small company like mine, we can't afford
Yeah,
to
to be pulling all that.
pulling
Yeah.
all of these credit reports for people that were unsure if we're going to be
Yeah.
approved. So we pull soft credit pulls, which are a little less expensive, that we can then convert into regular
Mhm.
credit reports that keep the expense down a little bit. Some of the lenders that we work with incentivize us a little bit and say, okay, well, we'll pay for your credit report.
Yeah.
But if they pull the credit report, you have to send it to that lender.
Yeah. Which
So
that's tough too, right? Yeah.
sometimes, depending upon the circumstance and what kind of lender it is. That's why I like being a broker, is because I don't have one little box that
Mhm.
that I have to work out of. And if you don't fit that box, then you don't get a loan. I have many lenders to choose from and to kind of find the place that's right for your specific scenario based on your job and your income and your history to place you in the right place.
Mhm. That's cool. So you can actually, do you have that process almost automated where you can send them out to everybody, or do you kind of select, like you said, of, you
So
know
we
what I
have
mean?
tools that we can use
Yeah.
to help like try to find the best place for them. We get marketed to a lot as a
Mhm.
broker of, hey, this
I'm
is
sure.
what we have as far as different programs that can be offered. Um, we do investment loans, for example. We have people that they can't really prove their income, so they want to buy an investment property, and we don't need tax returns or anything like that. We're basically going off of the value of the property and how much they can receive in rent for that particular property for approvals. So it just depends on the scenario.
Yeah, that's true
But
too.
that wouldn't be a program for a first time home buyer, or we're looking for maybe down payment assistance or low down payment. You don't have that much money saved, or you only have a certain credit score, things like that. So each we paint a picture, and each picture goes to somewhere else.
Mhm. That's awesome.
Mhm.
Like you said, you're not just constrained by
Yep.
one
If I
company.
worked for a bank, like
Yeah.
whatever, a bank down the street, they have their set of guidelines, and if you
Yeah.
don't fall into that set of guidelines, then
That's
they
it.
deny you,
Yeah.
which is a deterrent for especially like a first time home buyer. So, for example, if you went to whatever Bank of America and you applied there and your credit score didn't hit their box, then they're going to deny you. So you think as a first time home buyer,
You can't
nope,
get it
I can't
anywhere. Yeah.
get a loan. So that's why I like being a broker, is I can do those loans.
Mhm. That's awesome.
That is awesome. Do you want to talk a little bit about Clear to Close
Sure.
and how you started that?
Okay. So when I was in Maryland, I had mentioned before that they had net branches and I was their processing manager. And that particular company was called Bay Capital. They decided that they weren't going to have that office space anymore. It was in Hunt Valley, Maryland. So they had their net branches going outside and getting their own offices. So I decided that they're going to need a processor. We have no office. And I established Clear to Close processing as a third party processor. So each one of those net branches, even though that they had their own standalone office now, could all still utilize me as a processor. So I established that back in 2000.
Oh wow.
And then we decided we were moving to Florida, and I was already working from home, and they were already doing business with me. So I brought it here. So it's been in business for quite some time. We process for other mortgage brokerages, kind of like mine. Um, I try not to crisscross that. The processing company will process for other brokerages. And then recently, I had decided that there is not a company out there that really trains processors for the job,
Mhm.
or even loan officers, or in the mortgage industry in general. Like there's plenty of companies out there that'll teach you how to pass the test.
Yeah.
And the test is hard to, because if you're a third party processor, then you need to be licensed just like you are as a loan officer, but you've committed to just being a processor. And there's nobody that really teaches you the job.
Mhm.
Yeah, you can pass the test. We can all know all the rules and the regulations and the years that all of these things happened. But the truth is that there's not somebody that is sitting there saying, okay, you received the file, and these are the things that you review, and these are the names of the forms, and these are the steps as a processor that you need to know in order to do that particular job. And you learn a lot from processing because you're seeing all different kinds of loans. It's not like, okay, we only work conventional loans. No,
Yeah.
you see
Get
conventional,
it all.
FHA,
Yeah.
VA. The list is long. You see it all. You see all the problems, and you're able to almost prevent those problems as a processor if you do it long enough. So I just started that training company just a few months ago. Things were slow, the market was different, and I'm like, well, we're going to need processors when things start to pick up.
Exactly.
So I'll train them, hire them for the processing company, and then those employees would be able to process for other companies and know what they're doing. They're brand new.
Yeah. Very similar in the plumbing, HVAC, electric side.
It's a trade.
Yeah.
Yeah.
I just remember when I was taking my master plumbing test, they were talking about half the test is isometrics, which you use sometimes, but you don't use a whole lot
Mhm.
on a day to day. And then they're talking about, a lot about med gas, septic, standpipe, again, stuff that's important. You need to know. I mean, don't get me wrong, but like
Sure.
you don't use that every day. And the
No.
actual stuff that I've learned and I know and everything about plumbing, like there was hardly anything on it.
But how do you
Come on,
actually
guys.
do it?
Yeah, exactly. Like I'm like, guys, this is not making any sense.
I
You
know
know
all
what I
the
mean?
words to use.
Yeah. So I'm a good test taker, so I was able to, pass the test or whatever. But like actually showing people what to do is the most important thing,
It is. And
Hey, yeah, you can pass the test. Well, you know what I mean? But like you actually you need to know how to do the job. And those, people are like, oh wow,
yeah,
what do I do
what
now?
do I do? And then you as a company, like you're hiring these people that are right out of school or just recently
Yep.
licensed. They don't have that experience yet. And then you're paying them to kind of tag along with
Yep.
somebody else to learn, and time is money. We all know
Yeah.
that. And they might be great, but they might not get it.
Yeah.
So um
Correct.
I just thought it was something different and unique that wasn't really out there. And when you go start working a new job, they usually just like throw you into it and you figure
Mhm.
it out. Well, now you've messed up somebody's mortgage
Yes.
loan. So
Yeah.
that loan officer is upset. Realtors are upset.
Yeah.
The borrowers are scared
Mhm.
because you have to start over.
Yeah.
So hopefully,
That is the best thing you could do because then you're going to be able to pick the best of the best, right?
Mhm.
They're going to obviously
I know which
have a
one,
chance.
right?
Yeah, exactly.
Really quick of
You
the
know?
ones that are in it and the ones that are not, for sure.
That's been our success throughout all the years is we, again, like you said, it costs money, for us it was a paid apprenticeship pretty much, you know what I mean? But then in the end, the person, they're trained your way. They don't have, it's hard to teach an old dog new tricks, and that's very
It
true.
is, and
And they're really good people,
technology
sometimes,
morphs.
but yeah, exactly. Technology more, we may do something. Hey, the other person may do it right, but like, hey, we like to do it this way. We have a specific process and
Right.
procedure that we like to follow. So if you're um, doing it a different way than our way, it just makes
hard.
it's hard. Yeah.
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 And there's so much to learn. I mean, even in the plumbing industry, like I couldn't imagine like all the different problems that there are
Yeah.
and things that you need to know. And it's the same thing on my side. Like there's so many different types of loans, and you know, you don't know it's a problem until it's a problem.
Hmm.
So trying to prevent that and teach somebody to prevent it when they've never experienced it is hard.
Yeah. No, I totally understand
Yep.
that. Yeah.
I'm sure. Now I
It's
gotta buy a
deep.
whole new air conditioning unit.
It's deep.
All because you didn't do this or whatever.
I think we got a few
Comments.
comments.
You. Okay, so Amanda Hart said, watching. Lindsay Weber is the best. She has helped us many times.
Well, thank you.
Yeah, both of you guys are like the 18.
The 18, yeah.
And your apprentice, Kayla.
All
She's
right.
not the apprentice, but
No,
you know what I
she's
mean?
not.
Kayla's awesome.
She's
Uh,
taught me
Oh,
a
there's
lot.
Kayla right there. We're just talking about you, Kayla.
So Dan Flowers said Lindsay Weber is the best, and then Kayla says, "Hey guys, some of the best in the business here."
How you doing, Kayla? And Dan, how you doing?
Right back at you, Miss Kayla.
Oh, she's awesome. She's
Yep.
just like an Energizer bunny, and her videos that she does
Yep.
with lots. Oh my God,
I love working
kills
with
it.
Kayla. We do well together. You know, trying to. There's lots of things that people don't know. So her and I feel like we communicate well together. So we communicate to the borrowers together well. So if there's something that she's working with them, we've worked together enough to know, you know, what she's talked about and what I'm going to talk to them about. So it kind of, you know, from both sides of it kind of goes into a, you know, successful closing, I guess is the best way to
And then
describe it.
then the buyers, they see that too.
Yeah,
you know,
and
or
it's
sellers or
smooth for
whatever.
them.
Yeah,
'Cause that's
exactly.
important. You know, it's
They don't want to see all the other
no,
crazy
they
stuff
don't.
you guys got to do.
They're all crazy in the background. Everything's good. Perfect.
Just
it's
when is
fine."
it closing? When do I get my money?
And that's
Or
what
when
they
can I
want-
get in the
That's
house?
what they want to know. Exactly. And that's the way
I
that
don't
it
care about the
should
rest of the
be.
stuff. Yeah.
And that's the way that it should be. So we, like I said, work well together. So hopefully they're getting that smooth experience. And for the most part, are there hiccups? Sure. But that's, I think, in any industry. And, you know, sometimes things come up or we have to detour a little bit. But we work well together to do that.
She says,
I hear you.
I hear you. And she says, "Why have you not invited me to the corner yet?"
Come on, Kayla. Right here. We got
Yep.
the scheduler right
Yep.
here. You're on.
Message me. We'll
Should
get
have
you
both
on.
of you guys on.
Yeah, we could have.
And then Amanda says, "Kayla teaches Lindsay and I new things all the time, especially technology."
Is that an age thing or what?
Might be. Yep. How to do her videos, how to post them. And she was a beast at designer purse bingo. That was her. We each had our role. It just naturally happened, but hers was for sure the social media. And you know, we had a game plan, but she really took the bull by the horns, and you know, she does it just like you know her business was.
Yeah.
So
she kills it. You know,
Yeah.
I've already said it, but you know, I mean, she does a excellent. You know,
and they're great. They're so great. Her videos are fantastic.
Easy, Tanner.
Easy.
Oh. I saw Brian Amanda Hart, so I was talking about Brian Amanda. Sorry.
That's funny.
I got the trigger word, interest rates. So what are you seeing with interest rates?
So
I know they've definitely come down a lot since the top, but still,
yes, they have.
people have this perception that they need to be at, you know, 3%.
I don't think it's gonna happen, guys. I really don't.
Yeah.
When I first started in this industry and we were doing refinances, we were taking people from like 12, 13% to 7%, and it was like fantastic. They were ecstatic. If I looked at somebody today and told them that they had to have a 7% anything interest rate, they'd look at me like I have 15 heads. Are they down? They are. Are they going to be 3% ever? I mean, not anytime soon.
Yeah.
I think everything will level out. I think our biggest quote unquote issue, if there is an issue, I perfect world, if I were to have a type borrower with all the ducks in a row, then we're able to get in the 5s right now. Pretty low 5s. And I don't think that that's bad. I think our issue is the values of the houses that we currently have. We gained so much equity so quickly.
So 5% on a housing value now versus, you know, what it was 50% cheaper back then. That's you're paying all that
a
interest.
$300,000 house is now $500,000. That's a big difference in monthly payment when you have an interest rate at 5%.
Yeah.
Comparative to 300,000 at 3%.
Yeah.
You know.
Exactly.
So
that's what makes it tough for new
is.
buyers. Yeah.
And even people to move, like they're going to move out of these homes that they've had for a few years. Now they're going to pay a higher interest rate, and they're definitely going to pay more in home value or purchase price. and they're getting the same quality that they already have.
Mhm.
So in order to get better quality, you're paying even more at a
Yeah.
higher rate. So
So what's the
it's like a catch
incentive?
22.
Yeah.
But if that's something that you need to do, now's the time to do it. You never want to wait.
Yeah.
Um,
Because you could always
you
refinance later
always
on. Yeah.
refinance,
Yeah.
and that's the
At
objective.
least you're locking in this price. So if
Mhm.
something happens and it honestly, it could go the other way again. You know what I
Yeah.
mean? Very easily,
Yeah. Yeah.
So at least you're locking
Tends
in
to be
this
more
price and then
expensive,
go.
and
Yeah.
the market changes.
Yeah.
It's like a roller coaster.
Yeah.
It has done it consistently since
Forever.
for as long as I can remember. It goes like this. And December sucks. So.
Yeah. Forever.
Yes, take off December.
Yeah, some people maybe want to move in before Christmas a little
They
bit, but the
do.
process would have to start way before.
Yeah.
Yeah.
And your Thanksgiving right
Or
before,
Thanksgiving. Yeah.
and
I'd want to be before that. I wouldn't want to be between, but before
it's rough.
Thanksgiving. Yeah.
But it does happen for sure.
Yeah.
People want to move in before the beginning of the year, but it's not like booming, not like say June.
I was about to say, is June because of school and
I
stuff?
think so, and it depends on the area that you're in. But yeah, pretty consistently, like the summertime, it gets busier, and I'm not sure that we're going to see an interest rate cut. Um, they just met the other day; they didn't do anything with the rates. I don't feel that we're in a bad spot with the
Yeah.
interest rates. To be honest, you're looking at
Yeah.
what you can afford monthly payment wise without feeling like, I'll call it house poor.
Yeah.
And then when the rates do come down, you have the opportunity to refinance. And that's kind of what I talk to my clients about, is that this might be the interest rate for now, but a year from now, whatever, we can do a streamline refi, or, some type of discounted type of refinance to keep the closing costs down, because you
Mhm.
already have the equity.
Yeah.
So
Yeah. Yeah. That helps a lot too,
it
and
does.
then, plus the equity goes up and
Mhm.
everything,
Yeah.
So how is that, I guess, refi within a year? You talked about streamline. I've never kind of heard that. What is?
So that's a government term for government loans, FHA and
Yeah.
VA. As long as you're reducing their interest rate and making it more beneficial, they cap you at a certain loan amount. There's a calculation to use, and then we're reissuing their title insurance from the title companies that we use, trying to keep the cost down. Most of the time, either the money comes from somewhere, guys. It's just the way
I
that it is. So
know.
either you're bringing that monthly mortgage payment opposed to skipping it to that table to cover those closing costs, or you are needing to bring extra money to cover the closing costs because we're capped at a certain loan amount, or we have to raise the interest rate to be able to
Mhm.
get enough credit to cover the cost of the loan. But they do keep the closing costs down. Some banks, they're like, oh, we'll pay your closing costs. That's because you're paying a higher interest rate. It's coming
Mhm.
from somewhere. Nobody's working for free. They can't do it for free. So usually we try to have them bring that monthly payment to keep the interest rate down, because that's the most beneficial way, and cover the closing costs that way with your monthly mortgage payment. They don't really skip one.
Mhm.
Streamline.
Yeah, exactly. Yeah, it makes it easy.
Yep. So that I believe that's probably coming. We've done quite a few temporary buy downs, and what that means is that we were able to lock in a certain interest rate, and then um, have them pay a, at a different interest rate for a certain amount of time. So if you locked in at 6% for that first year, say it's a 2% buy down. So your first year of paying that mortgage payment, you're paying at a 4%, which is
Mhm.
great. And then the second year, it's going to go up another point. So then you're
Yeah.
paying a 5% interest rate. Well, then at the end, now you're paying what you're locked in at 6%.
Mhm.
So those types of loans, we're going to want to refinance them
Before it gets to the
before
yeah.
it gets to back to the 6%
Yeah.
or whatever it was. They're just fictitious numbers.
Oh,
But
that's
you
cool.
get
I
the
didn't know they
concept.
had that. That's a
Yeah,
pretty cool product.
we did quite a few of them recently because the interest rates were high.
Yeah.
So
They're high and you're trying to get them on the way down, and that
mhm.
makes sense for
Of a mortgage
the
payment they
mortgage
can
company
afford.
too. Yeah.
Yeah, yeah. But now they're all coming to a head, and
Yeah.
we have to refi them. So we'll have to figure it out as they're thrown at us. But yeah, lots of
Um,
different avenues to have in the mortgage industry,
mhm.
not just purchases. And again, it goes in waves of We'll have like little mini refi booms. That's all we're doing, and people aren't purchasing, or that's all they're doing is
Yeah.
purchasing. So you have to kind of be prepared for what that market is handed to you.
Hmm. That makes sense. Yeah. My sister-in-law, well, actually, and my brother-in-law's where they met. They worked at Bank of America. They were doing it. Now he works at Raymond James doing it.
Mhm.
But same thing with her. Like they would just push her to, you know what I mean, wherever she was kind of needed. And
Yeah,
she told me, refis or that. You know what I
yeah.
mean?
Well, that's where we get into the whole processing training, is that they need
Mhm.
to learn how to do that.
Yep.
Because although the skeleton's the same, there's still different parts of each type of transaction, and if you don't know, then you don't know.
Hmm.
So try to teach them.
Um, I guess some tips and trips or tricks of paying down your mortgage early.
Uh-huh.
So, like, what are people doing, or what makes sense to you to try to
So
pay an
my
extra?
yeah, my advice to them of trying to get it paid down early, for example, um, so there's many ways. Well, you can do like a biweekly payment, and then you have extra payments that are applied towards your principal. That's the most common, I would say. Is that they set it up on auto pay, and you're
Hmm.
paying a mortgage payment, half of it biweekly, because there's 26 weeks. You essentially get an extra payment applied towards your
Hmm.
principal, which takes time off your loan.
Yeah.
That's one way. Another way is to, when you're doing that refinance, and this is kind of what I'm thinking is going to probably happen pretty soon, is that they're on this 30-year term, they've paid it for 2 years. Interest rates for a different term, say a 15-year or a 20-year, are less of an interest rate than a 30-year. So if you're doing a refinance, a lot of times you can take advantage of that lower interest rate and knock term off of your
Mhm.
mortgage, which saves you hundreds of thousands of dollars because it's years that you're taking off the mortgage.
Mhm.
So when we're doing these refis, that's one of the things that we're definitely looking at, is like, would it be beneficial to take that 30-year mortgage to a 20-year? And, are they comfortable with that mortgage payment? So at that point in time, you're looking at, whatever their monthly expenses are coming out of their pocket for that house. Maybe it's a little bit more, but you've just taken however many years off of their mortgage by taking the term down.
Mhm. I was able to, so my first mortgage, I was able to pay weekly,
Mhm.
and they actually applied it
Directly towards your
weekly.
principal.
Yeah.
Uh-huh.
So like I was able to pay it weekly and they would apply it. And then my second time I got a mortgage, I'm like, I want to do the same thing. But what they were doing, they were taking my money every week, but just holding it until the end of the month and then applying it. But like
Oh, no.
being able to
Uh,
apply it earlier,
Right.
I knew that
Pay the interest
saved it.
first.
Yeah, exactly.
Mhm.
So
Yeah, so you have to watch what they're having you do, because if they're
yeah,
holding it and then just applying it as a regular monthly payment,
yeah.
you're not really doing
No, it
anything.
doesn't make sense.
Yeah.
Yeah.
Yep. You'll get
So
an extra payment or two at the end of the year,
yeah.
but it takes so much longer to do that,
Mhm. Yeah, I just
especially if
remember
they're not
looking at the
applying it.
calculations and what the difference is, when I did it, the first time, like, well, this will
Yeah.
save me, a good amount of money because
Mhm.
the interest is accruing that whole month too. You know what I mean? If you're paying it weekly, right?
My advice to some previous clients, they had sold these homes and they're getting ready to buy another one, and they wanted to take this big whole large lump sum of money and apply it towards the purchase of their new home. Well, at the time, because interest rates were slightly inflated, and they're they didn't have to take all of that money and apply it towards their loan. They can go and invest that money,
Mhm.
make more money off of that. And then when they do the refi, if at that point in time you want to take that money and apply it towards your principal, now we can reduce your term and you've reduced your principal of your loan. So your monthly savings is significant, and you've earned money on holding that money opposed to putting it on your mortgage.
Yeah, that's
So
honestly what I do.
it's circumstantial, for
Yeah,
sure. Some people can do that, some people can't, and some people,
gotta be a
black and
little risk
white is good
averse
for
too.
me, right?
Yeah,
Like, write it down, show the pros and cons, and then be able to make that decision if that's the right for your family.
Mhm.
Because it's not for some, but for
Yeah,
others it is.
yeah,
You would be one.
yeah. What do you have? I got a few
Um,
more questions, but
I think, what is something that the average home buyer doesn't know that they should? Like, a lot of the times people might come to you and you're like, an average
That they
thing that
don't
shouldn't-
need 20%. And as many times as we said it, it is stuck in their head of that they have to, or that's the best scenario. Like, I just really want to wait until I have 20%. Well, even if you have your 20%, that doesn't necessarily mean that that's what the best circumstance is. That comes into play with a conventional loan to keep monthly mortgage insurance out. But a lot of people are under the impression that you still need that large percentage to put down on a house as a first-time home buyer, and you do not.
That's what I always, I mean, I don't know too much, but from what I see, that's what I would always assume too, is that you need a decent amount of money
to
put down
Yeah.
before you are able to buy.
What's like the lowest you've seen somebody put down?
Oh, we've done 100% financing,
Oh,
and then
100%. Wow.
yeah, and included some of their closing costs. It's all circumstantial. Some people are able to negotiate like seller paying their closing cost on top of some sort of down payment assistance. When you go under contract, you're giving them a deposit, and we've actually given buyers back their deposit because of us being able to close that gap with down payment assistance, a government type of loan, and then the seller paying closing costs on top of it. So they don't need to bring any funds to the table. Is it every time? No, but
Yeah.
sure.
Yeah.
No money, they get their money back.
I like that.
Doesn't always happen. That's good.
AI.
Oh,
How is AI
so fun in the mortgage industry, guys. It is definitely a fantastic tool, but there you have to be really careful. One, making sure that you're being provided the correct information. Two, that you're not taking somebody's personal information and uploading it for the world to capture. We have lots of rules and regulations in place. Go figure.
Yeah.
The real estate world, as far as technology, is difficult. There are certain things that we can't advertise, and the way that we advertise. So there's all kinds of red tape. So to speak.
Yeah.
But AI, again, fantastic tool, but you have to be really careful with what you're doing with it.
Yeah. I'm sure it'll
I
get
would
better
love
and
to
better
take
as it
somebody's
goes.
stuff and be like,
Upload
here,
it, ChatGPT.
tell me what to do. It's great. Calculate all of this for me. I mean, I guess they could, but I don't. Your number one job is to protect the borrower and their documents.
And you're putting your name on it too,
Sure.
right? Your license and everything
Yeah.
else. Yeah. So
Yeah.
you got to be
very careful.
very careful.
Yep. But typing an email back, sure, use it all the time. ChatGPT it up.
Yep.
But it helps you like organize your thoughts. So even though it's like, I'm typing into ChatGPT, it's still my thoughts and being able to organize them and kind of like, here's everything that I want to say. And it makes it in a nice, pretty format. And I go back and, edit it to
change a couple
the way
things.
the way that I would say it. But it's fantastic. It takes, gives me my time back for typing out that email and rereading it however many times.
Yeah.
Just kind of like spew it all in there, and then it spits it back out in a nice, pretty format.
Yep. I do that.
I use
sometimes.
that. I use that. And then social media is hard because we're not able to.
But so you guys have some, I've got friends that are financial advisors too, and they're just so regulated on what you can actually say or put out there, and they're scared. You know what I mean?
Because of the unknown, and they're big, hefty fees. It's not like a slap on the wrist type of thing.
Yeah.
So
it's kind of the same thing.
Yeah, same concept. But there are certain things like I can do videos and kind of explain, like we're doing now, different types of loans. I really can't quote an interest rate because the interest rate that I can offer you isn't necessarily the same one I can offer you. Again, because they're two different scenarios, two different situations completely. You can't say, okay, well, I'm only going to do a business with Tanner. Sorry, good luck to you, first time home buyer. It doesn't work like that. So heavily regulated.
Yeah.
Well, I guess we went over it, how you've seen the industry change in 30 years, just all the interest rates.
Well, we used to handwrite applications and fax them into lenders, so lots has changed.
Yeah. Oh, that's true as well.
And
Yeah.
that time frame probably was a little bit longer too, right?
Oh yeah, it took forever to close a loan. We can close loans. I mean, we close loans as soon as 8 days, 10 days. If all of our ducks are in
Everything's
a, you know,
perfect.
everything's
Yeah.
perfect. So don't everybody get too excited, but
Yeah.
the possibility is there. Back then, honestly, we used to handwrite applications and send them in for pre-approvals along with the credit reports, and your 50-page fax didn't go through, so you got to redo it, or you're waiting for your confirmation. Gosh, I'm aging myself, guys. What's happening?
I used to send out faxes to builders and stuff to try to get their work back in the day. So I know.
Yep. So lots of technology has changed. And one of the things that I say in the processing class is that as long as I've been doing this job, I still learn every day. Whether it's a new program or a new situation or new employers or I mean, gosh, so many different things. And then being able to utilize new technology. Like I said, we don't have any paper. Could I? Yeah. I have a notebook that I keep all my own stuff because that's my personal preference. But I literally don't need any paper on my desk. Do I have it? Sure, but it's completely technology based now. So, yeah, interesting.
I wanted to talk a little bit for my final question, but we talked a little bit about the connector. But I know you're like founder of the connector. So what got you guys to, I guess, start the connector? Where do you guys see the connector going?
So some things were changing, I guess, with us personally and some of the things that we were involved in. And it almost kind of just happened. It was a page that actually Amanda had already had that was
Yeah, she told me that too. I'm like, I didn't know you had. I've never even heard. You know,
it was
you guys never
almost
invited me back in the day,
right. I'll call it stagnant in a way,
Yeah.
where it was sitting, and there were things that we wanted to do in the community. And I told her, I said, well, when you're ready, I'm ready. And she called
Yeah.
me one night and she was like, I completely forgot I
Yeah.
had this page. I'm like, well, send it to me. So we were looking at it, and our objective with it was to have, and I think that we hit the nail on the head. Our objective was to make it that hometown feel of people that are here, and everybody is included, and that we're able to bring that to our community and have um, everybody be able to connect, whether it is businesses together or just people and community events. That's where we got the connector. And I think that naturally, at least Amanda, I, and Kayla and I are, if somebody wants to know, like, hey, who do I need for plumbing? Well, you need to call Tanner. Like that, they naturally come to us and ask us things because of the types of industries that we're in.
So you're a connector in your field either way, and then
Right.
it's just natural.
Exactly.
Yeah.
Yep. So we kind of let it go. Like it just happened naturally. And then we decided that we would want to do a community event. And remember, I told you we had some hoops that we needed to jump over in order to be able to incorporate Justin and his company. So we established the 501c3 almost out of a need.
Which that's tough in itself.
It was.
Yeah.
Lots of paperwork, guys.
Lots of paperwork. Did they have the right person doing it? Or?
I did. I will take a little credit for that. That was rough. But we did it, and we did it quickly. We had to, because we kind of already had everything in place, and we were like, oh no, what do you mean?
We need this to do that.
We need to do this. So we did. And then we were able to, of course, have the event, and everything worked out in the end. But it was a little rough there for a minute. But looking back, things happen for a reason, and all of the pieces fell into place when they were supposed to. And I'm really happy where we're at.
Yeah, how many followers or likes or whatever they call it nowadays?
So we just reached our 10,000.
Yeah, that's awesome.
In the page, and we weren't like, oh, we're gonna have 20 million followers or anything like that. That wasn't really our goal.
That's not the goal. Yeah.
No, yep. It was to have that close knit community feel. We did make it a contest for the 10,000 because we were pretty close anyway. And Lindsay from Swag Party Rentals, she actually helped us get there by donating one of her bounce houses as the prize for helping us get to that number. So that was
Yeah,
pretty
you
cool
Lindsay's,
too.
you guys are at all these events.
Yeah, yeah, that's
Yeah,
all right.
Lindsay's awesome too.
She's fantastic. I've known her for quite a few years, and she really has done very well with her company and her business. And she's such a great person.
Mhm.
Yeah,
Yeah, she's a worker.
she
She
is.
kicks butt. She really
She
does.
does a lot. She does a lot.
Yes.
Yeah.
Well, I got one last question, unless you have anything else.
I don't think so. No.
All right. 5 years from now, where are you going to be?
Sitting on a beach.
There we go.
So ultimately,
Sold.
right? Ultimately, I believe that is. I'm not saying it's gonna be 5 years, but ultimately, I believe that's my goal is to continue to grow the companies that I have, teach people,
Mhm.
the younger generation to come in of how to do it, how to make those changes,
That's your
and
legacy.
yeah, and how to be the mortgage company in their own backyard, which I think is important. Um, so I jokingly say on the beach, but maybe soon after. Yeah.
Yeah. Why not?
I'm getting there. I'm getting up there. I have more than 5 years, but I'm getting up there in age. So it would be really nice to take a lot off my plate
Mhm.
to be able to do more things in the community and not, have it kind of run itself.
Mhm.
Um, and when I'm needed, I'm there.
Yeah. Cool.
Yeah.
Well, thank you. I appreciate not only being on the podcast, but everything you do for the community, for
Well,
the
thank you.
connector, for new home buyers, for investors, whatever. I know you do an awesome job. So
Well,
thank you.
thanks. And right back at you.
Yep.
Yep.
Cool. We'll see you guys in 2 weeks.
Okay.